Welcome to the Q3 2023 earnings call for Regency Petroleum Limited, moderated by Learn Grow Invest. I'm Jeremy McDonald, CEO of Learn Grow Invest, and I'm joined by the RPL team. So at this time, I'll hand over to Andrew Williams, CEO of RPL, who will kick off today's proceedings with a word of prayer.
Morning again, everyone. Let us pray. Thank you, Heavenly Father, for this day. Thank you for all your blessings and mercies upon us once more, Father. We ask that you continue to keep us safe in these times. Continue to bless us, oh Father. Continue to let us prosper in all that we do. Continue to bless Regency Petroleum, oh Father, and our shareholders and our people of Jamaica. Keep us safe once more, oh Father, and thank you for all that you have given to us. In Jesus' name we pray. Amen. Okay, morning again, everyone, and thanks to Jermaine and the Learn, Grow, Invest team for accommodating us and facilitating this Q3 2023 earnings call. I start out with my remarks, CEO remarks, and just touching on some points in this section. We started, as most would know, we opened our Paradise service station in the middle of Q3 this year. It was a little bit delayed, but we started in August. We had a grand opening on August 16th. And with regards to our service station in Negril, we have everything on schedule for our opening in Q4, close to the festive season. We are hoping to open close to the festive season. And also Q3, Q2, in Q3 we had received the final tranche of our bond that we had placed with GK. So we are now have full access to those funds that is geared towards the construction of our Kingston service station. Fine. Regards to our corporate and social responsibility, as usual, we always pride ourselves with donating to churches and schools primarily, along with our social responsibilities. So we had our donation to the Holy Trinity Church, Grange Hill, renovation of its rectory, which is in a devastating state. And we saw a critical need there for us to contribute on that. So that we did that in Q3 also. And with regards to our strategic initiatives, well, we have a number of projects on the table that has been on the table for the past year. And we are focused on completion of these existing projects and also focused on mastering our focus on our efficiency of operations of these, what we are doing now and what we are about to open very soon within Q4 and Q1 of next year. All right, so I'll talk further on these points later on the company outlook, but I'll hand you over now to our CFO, Jerry Grant.
Good morning to our shareholders and all our listeners. RPL grew revenue by approximately 78 million. This represents a 39% increase over the comparative period. The opening of the Paradise Pen service station would have contributed to this improvement, along with our partnership with Just Gas Distributors Limited. Compared to our 2022 period, the partnership with Just Gas has seen our LPG segment grew from 20% of our overall business to approximately 30%. With increased revenue, we were able to increase our gross margin by 14% and net margin by 6.19%. The growth in gross income was 8.2 million. For the 9 months to September 2023, the company generated 642 million in revenue, compared to the 533 million in 2022. This represents a 20% increase as more LPG and gasoline volumes were sold. A reduction in fuel prices over the period prevented an even higher increase. Because of increased costs of sales, there were only a 9% increase in our gross profit compared to the September 2022 period. Increase in the administrative costs such as salary and wages, advertising and promotion, security, and finance costs would have led to a 37% reduction in profit before tax. That is a 24% lead to a 20% reduction in our net profit. The influx of new shares from the IPO led to a reduction in the earnings per share, as you are seeing there. Next slide, please. Our balance sheet is looking good. And even though the quarter shows a 23% reduction in cash, the company is very liquid, as currently it has approximately 90 million or even over 90 million in cash on hand. Property, plant, and equipment grew by 135% as we continue investing in our service stations. At September 2022, we have 194 million invested in fixed asset. 1 year later, that figure is showing 456 million. That's a tremendous growth there. As we continue to manage our receivables, there was a 29% reduction over the last year figure. The significant jump in long-term borrowing is due to a bond that was raised to construct a service station, as we all know, on the Spanish Town Road. There was a 22% increase in our payables. However, this is no cause for concern as we have excellent relationship with all our suppliers and no credit terms have been breached. So we are in good stead with all our suppliers. Okay, let's look at our statement of cash flow. Cash flow from operation, 26 million for the current quarter. Prior quarter, it was 72 million. Cash flow from investing, 208 million. You know, we have been investing heavily in our service station. So there were 208 million for the period. And cash flow from financing, as we know, this is due from the proceeds of the bond, 92 million. I must make note that the second tranche of the bond proceeds were not received in quarter 3 here. It is not reflected. It was received, a couple days after the quarter, so it would have been, well, it would be reflected in the following quarter. Could you go to the other slide? Okay, I will just, okay, we are seeing the property, plant, and equipment schedule there, but I think I've touched on critical areas with the property, plant, and equipment where we have invested over 200 million in our infrastructure, getting the service station up. I will now turn over to our CEO.
Okay, thank you, Jerry. Thanks for that. All right, with regards to Regency Petroleum and our outlook, our company's outlook. Now, from year to date, we have had a busy year, considering that we have been listed over just under a year now. We have had some delays in our construction process for the service stations. But however, we have overcome the majority of those hurdles and we managed to have opened our Paradise service station as promised on our prospectus. Not on the timeline that we had promised, however, it's fully functional currently and we had our launch in August, on August 16th. So we have been operating this service station we operated it for 1.5 months out of the third quarter. And we have now been operating for, I think, 3 months in total. So we started in August, middle August. So we did September and October operations. And I can say that we have met our targets in terms of revenues so far. And month over month, as we go forward, we have had each month has been our best month yet with regards to revenue. So as each month passes by, we are having our experiencing our highest revenue at that point, which I would like to reiterate that over the past, I've always stated that Regency, our mode, our methods of operation, or revenue channel was just from our service station in Savlamar, dispensing 90 and automotive diesel. Now, we have grown the business marginally based on our operations from that service station and our LPG. We have taken on a franchise agreement, as we know, to expand on our LPG. So we have experienced marginal growth. Now, there has been a significant growth for Q3. Reason being, we had the opening of the service station, which contributed to I would say 85 to 90% of that 39% increase in revenue. And the balance, the other 10% or 15% would have been from our Just Gas franchise agreement. So the LPG has increased significantly also due to that franchise agreement, and that's regards to bulk sales. Now, moving forward, that was to recap a bit, but moving forward, our outlook for Q4, we have a number of projects on the table. We expect to complete and start fully operational our Negril service station, have it fully operational by the festive season, close to the end of the fourth quarter, and all indications show that we should have that in full operation within, say, 2 weeks of December. Now, we also have our Kingston project, which also scheduled our targeted timeline for completion was within the first quarter of next year, which all indicators show also that we are in line with that. I am very conservative based on my experiences with the construction processes and delays that we have experienced, both with global challenges that we'll find, and what is happening in the economy, what is happening globally. We have challenges, and in saying so, we expect with all of this, with what we have in place and what we have on the ground currently, and the status of our project in Kingston, I see no reason why we shouldn't be able to have it fully operational in the first quarter of next year. And we are working expeditiously to do so, considering that we took a long-term loan, a bond out on this. We need to have it operational immediately. Our projections, our targets for Kingston is very bright based on the location and the traffic flow. So we are looking for big things in Kingston, and we want to have it operational very soon. So our shareholders, our company can continue to grow. So with regards to the outlook, it's quite conservative. We have these things on the table. We have these projects on the table. We want to have them completed and have it fully operational. At the same time, not to say that we're not seeking or looking out other expansion otherwise, which we do have, which I wouldn't want to disclose at this moment. But yes, as I always say, the entire process of construction of service stations, it's a long process, and the approval process also takes up a bulk of that approval process, of that construction process. So to have a service station fully operational from seeking approvals to complete construction, it takes some time to have that done. So we are focused, on our priority is to complete these two service stations, have them fully operational, but at the same time, we are still in the process of seeking to expand our footprint across the island before we can, as I always say, go globally. So we do have other projects that we are looking at currently, but there's no priority primarily placed on that right now. Our main focus right now is to complete these 200 operational, so we can experience the additional revenues, experience the increased profits, and then we can move forward with with other service stations to come. All right, so that's where we are now with our company outlook currently, and we will look forward to our next earnings call when it comes, so we can see what we have achieved based on what I'm saying now in terms of having these two other service stations fully operational, and we will see our revenues from there. Thank you. We'll move into a question and answers now.
Yes. We're going to do that. Let me bring Jerry on as well, just in case we have any questions for him. So I just want to tie things together for persons who have been listening, Andrew and Jerry. So what you're saying is, from the point that we had the IPO, from you started to undertake the plans that you'd have had in terms of use of proceeds, you've been able to accomplish what you set out to from the prospectus, with a pleasant surprise of a third station that you didn't plan for, right? And based on what you have experienced so far, you had the delays and challenges for completing the first two, and you're able to transfer those learnings to the third one that you're now expecting to be completed some point in Q4, and the Negril station you're expecting to be able to complete for Q4, the Q that we're in right now.
Yes.
Okay. So what I think the obvious question for someone might be for that, are you expecting, so just like you were able to see maybe 6 weeks of revenue for the previous quarter through a quarter that we're talking about now for the Paradise Pen station, can we expect something similar for Negril's station for Q4? Do you think you'll be able to realize any revenues from it for this quarter?
I'll be very conservative in stating, based on Negril's location as opposed to Paradise's location, I am expecting a minimum similar increase in revenues, at minimum similar increase in revenues for the Negril service station.
Okay.
At the bare minimum, yeah.
All right. So at this point, is it mere a formality in terms of when the open date will be announced? Because at this point we're at about 6 weeks to the end of the quarter.
Right.
Okay.
So we're expecting to open within the first 2 weeks of December. So by within the first 2 weeks of December, but it will go down to, we definitely will be open for the festive season. All things being equal, we should open for the festive season.
Okay. All right, great. Thank you for that. Let's go to some of the questions that we have here. So Ian is asking, what steps are being taken to prevent construction hurdles from delaying the opening of the Spanish Town Road station in the first quarter of 2024 as stated?
Okay, so those steps already have been taken. The Spanish Town Road service station, the primary equipment that would have held us up in terms of the construction process, we actually secured those just a little prior before the bond was actually issued to us. So I'm making specific reference now to the storage tanks. They have already been installed, and to the canopy, which we are two of the major equipment, pieces of equipment I would need for the service station. The canopy is at this point in time has actually been erected, and the sheeting has been gone on. So we are well on our way with the primary hurdles. What we have done, we have learned from the construction of Paradise, and we have secured some of these equipment prior to even negotiating the bond. We actually went out and sourced some of these equipment prior to it, and we had them in the country already. So yes, what we plan to do in the future is we cannot control what we have to import, because Regency, as you might be able to tell, we try to stand out amongst our competition in terms of our service stations, our presentation, and even our equipment and technology that we use. So we will do our best to procure and secure our equipment, what we can do locally, and whatever we have to do overseas, well, we will try to procure and secure it at an earlier timing. But really and truly, to be totally honest with you, some of these equipment, especially technology-wise, we have to import them. So it's mostly out of our control when it comes on to importing. We will do our best at all point in time to play our part in procuring this equipment. But to be totally honest with you, that's the best we can do now if we want to maintain that standard that we have set out, and we want to abide by that standard. That's just the reality.
Okay, so you're saying that based on what you learned from Paradise Pen, you ordered that specific equipment, which was the storage tank, which caused the delay for Paradise Pen. You have that already. So based on, again, everything that you've learned from that, you just ensure that you were able to secure those specific items which caused the first delay, so that you don't have the same delay with Spanish Town Road, right?
Right.
Okay. Right. All right, next question here for you is from Omar. Do you think the Negril gas station revenues will be captured in Q4? You have actually answered. You've actually answered that already. So Omar, hopefully you got a chance to hear that. Question for you: what are plans to build out streams of revenue from your existing service station? So you can maybe include Spanish Town in this. Once you have those stations fully completed, what are the different streams of revenue that you'll get from each of them?
Okay, so we're expecting a minimum, as stated earlier, of a similar increase, because we really and truly haven't experienced a full quarter of Paradise service station along with our current location being in operation as yet. We will experience that in the fourth quarter. Now, all indicators again show that we should have a significant increase in revenue for Q4 based on what we have experienced in Q3. Now, for Kingston, we are, so I'll be very conservative. So if we at the very minimum again, we will expect, I would say, a 30% more increase than what we are experiencing from Paradise and from Negril. So it whatever increase we have experienced from Negril, we'll be experiencing from Negril, and from what we experienced from Paradise, I would say Kingston would carry a 30% more than that would have experienced there. Considering the traffic flow, the research that we have done for the location and for the area, and it's a higher traffic flow than in Westmoreland, and our location is as I said prior, it's an excellent location. Our competition is not too close by, and yes, we are expecting significant increases in revenue. So to basically get to the point, we have these two service stations up. I think I'm going to answer you directly. I think I understand what you're trying to ask. So we say for the first quarter of next year, we should have in operation 3 full service stations: Paradise, Negril, and Kingston. And for the end of that, and our current location in Savlamar, and at the end of that fourth quarter, our first quarter next year, I keep saying fourth quarter, at the end of that first quarter next year, we would have all these service stations, everything that we have on the table, everything that we have stated, everything that we have promised, in full operation, and we should see significant increase in revenues. And I mean, I don't see it going any other way, really, because we are a growing company and we are expanding, and I don't see where our revenues should not be. We should not experience a significant increase in the revenues and profits also.
Okay. So in terms of, well, I guess this question would be related, so I'll pose it here. It might be for you, Jerry. How confident are you that you can manage costs going forward to ensure that the profits that Andrew is speaking about, you'll be able to realize?
Okay. Yes, currently we are seriously looking at minimizing our costs as much as possible. Most of these costs would have come with the territory. Increased volumes, increased business. We have the new service stations, so additional costs such as security. Those are, really important. You have additional costs due to wages, salary and wages. So these are costs that that we have to expect. However, we are looking at all times to minimize these costs. And an important thing to increase our net profit is also to generate as much income to absorb some of these necessary costs as possible. To answer the question in short, we are it's an ongoing thing to look at our costs. We have we allocate staff from time to time, or if we see where there is an over capacity in terms of staff, we take necessary measures. So it's an ongoing thing.
Okay, but based on, so when I reviewed your report, it seems to me that there may be, I guess, some expenses that might have been one-off for you. So, for example, the fees associated with the bond from
Yes.
GK, that was almost 9 million, and I guess some other expenses that might be there. One, they would not have been there last year, and two, they may be just localized to the quarter in which they were incurred, but I'm guessing that there may be some expenses
because
that
even
you're expecting will not be there going forward.
the third quarter suffered by various functions. That quarter we have quite a bit of function during that quarter, which would have contributed to increased costs. You know, we're talking about costs like AGM, hosting AGM. We have costs associated with the grand opening of the service station, and costs like those which are related to that specific quarter.
Okay.
Yes,
So,
and just to add to that,
yeah, man, go ahead.
okay. All right. So just to add to that, for Q3, in my opinion, we had an excellent quarter in terms of revenues and profits. And the reason why I'm saying so is that Q3 for Regency Petroleum has been the hardest hit quarter in terms of expenses. And these costs and expenses I want you to take careful note. They are not fixed costs or expenses. There are some variable costs that we had to incur. Well, one of them was the bond, as Jeremy and Jerry has stated just a while ago. The bond cost, which we had, it's over 9 million. There was a launch for the service station, which everyone was anticipating that launch. We had a launch that was quite significant in cost also. And we also had our AGM, which that will be a fixed cost during the course of the year. So that will always we always have a cost in some quarter during the year. Now, so to have increased revenue and to our profits to be where it was for Q3, I would say that we did excellent in terms of our operations and everything. Yes, we have some fixed costs that, as Jerry stated, we as an ongoing process. So we've just been operating now for a month and a half, or 3 months now, and our fourth quarter will reflect whatever adjustments would have been made to adjust those fixed costs, to reduce those fixed costs, or to make it more optimum for us. So we have to balance that cost to make sure that we are operating fully optimal, and our costs are low, our profits are high. And you know, so we are in that process now currently of evaluating and weighing the different weighing out to strike a accurate balance between these two, so we can operate optimally, efficiently, and experience the highest profits. So yes, I think we have a bright future ahead with that. And as I said, the Q3 for me, I'm quite satisfied with the results from that. And based on our expenses that we were hit with, you know, and we stood up to those and still could reflect a significant profit, you know, for us.
Okay. So the question that I have for you, Andrew, is based on what you're saying now. So one, we're not going to likely see any major expense in Q4, except maybe a launch for the Negril station, but you wouldn't have any costs from the GK bond. You wouldn't have any the only major thing that you're expecting is the launch. That's the launch. But then you'll have the benefit of revenues from that station, revenues from Paradise Pen for one full quarter, along with your other lines of business. So you're saying, well, where I'm leading to ask you is that are you expecting to finish this year in a better position than you were last year in terms of your full 2022?
No, man, most definitely. We're definitely expecting to do so. And what I can state with regards to next year, and the first quarter and the second quarter. Now, yes, we have had a busy year. We have taken on a project that we didn't expect to take on, but it's all in the benefit of the company and for its growth. We're referring to the Spanish Town Road project in Kingston. Now, for what I can say to the shareholders is that I probably should leave this for closing, but is that we have had an active year and we'll have an active fourth quarter in terms of construction being completed, and we'll also have some activity in the first quarter of next year because we want to complete Kingston. Now, with regard, I'm going to go now to the second quarter. That should be a period where we will be operating all these service stations smoothly and master our operations in terms of costs and revenue increase and profit increase. So that second quarter of next year would be a quarter where we would be breathing freely and not having any obstacles in terms of construction or opening or with regards to cost or expenses. So we'll have a second quarter next year, that's what I'm anticipating, of smooth flow of operations only, just operating these three. Now, my expectation from this is that based on our anticipated revenues and our anticipated profits, we can now move to building out other service stations probably without even taking a loan for that. So our revenues and our profits will be able to suffice us constructing another service station. So that is where I'm looking at, and that's what I'm targeting for. So we have taken our bond, yes, no, because of what has presented itself on the table for us, and we moved expeditiously on that, which I have no regret on. I mean, I know it's all in benefit of the company, and we will see that growth. So in 1 year, Regency will have 3 service stations basically close to completion. You know, although our prospectus stated I would have 1 and then the other Negril, but we have a third one which we never planned for. So, and all of this activity took place in this past year, less than a year since we've been listed, which I think we are not doing too badly with that. So I'm looking forward now for having these projects completed as stated earlier, having them completed and having a chance to breathe where we can operate and experience all these revenues without any additional construction costs or any additional variable costs that we don't really plan for, you know. So we lay it out on the table. We have our fixed costs and we can manage them and operate efficiently.
Okay. So you're saying that the best assessment of the full potential of Regency will be in that Q2 2024 where all construction is final and you're able to see just how much revenues you could generate. Any expectation? No, you're probably not allowed to answer this, but do you think at that point your revenues could maybe surpass, I guess, the revenues for the first 9 months about 642 million? Do you think you'll surpass maybe $1 billion in revenues at that point?
You mean at the end of next year?
Well, so no, for that.
You're breaking up a bit a while ago. You're breaking up a bit.
Well, I guess what I'm asking is, yeah, can you hear me now?
I think.
Okay. Jerry, you're able to hear me okay?
Yes, I'm hearing.
Okay,
no,
so it might be.
I'm hearing you now. I'm hearing you now.
Yeah. Okay. So I was asking if you think with those 3 service stations completed, do you think you'll be able to surpass $1 billion in revenue at that point, since you'll have all of those together working? So as trying to pull it out.
I'm going to answer you like this. With our 1 service station, we had experienced revenues of 690 something million last year. For this year, I think we in total for the 9 months we have experienced over 700 or 600. So I would say it's a possibility it's a great possibility that yes, we would experience revenues of over $1 billion next year.
All right, fair enough.
Yeah.
All right, Omar is asking, are you concerned about the increase in use of electric vehicles?
No, well, I wouldn't say we are concerned, but we are an energy company. So Regency Petroleum, we are focused on service stations and LPG currently. LPG growing steadily, and we're trying to significantly grow our automotive fuel sector, our division. Now, we are an energy company, so we look to the future. So yes, we move with the times. If electric vehicles come in, they are playing a significant role currently in our mode of transportation. They are not as significant as yet, but we will have to move with the times. So whatever the requirements are, Regency, I reiterate, is an energy company. So we always try to be forward thinking. So whenever it becomes significant for us to, or we see it's significant for us to do our planning in our planning phase to incorporate energy and facilitate the new needs for our mode of transportation and even energy, we will move in that direction. So we're currently we don't see a need to be really concerned. Our revenues are increasing, everything is going well so far, and we expect that in the near future to maintain that.
All right. Paul Harris is asking, when are you aiming to look at possible dividends? Now, I know you spoke about this in Q2, Jerry, in terms of your focus to kind of push back the dividend discussion based on the construction that was happening. Has anything changed in that regard? I think Paul is interested in finding out when you think you might maybe in a position to pay dividends.
I know that after the construction phase, which we're hoping by next first quarter next year, everything, I know the company would have been having a say of relief, get that off their hand, and then we would have been trying now to generate cash. We'll keep the cash. We don't have those cash to pay out in taxes. We have that tax relief. So we would have been accumulating the cash with the intention to have our shareholders, be happy. And that would be one of the foremost things in the director's mind going forward after we get those gas stations completed.
Okay. And just to add to that, our policy has not changed with our intentions with regards to dividend payments. There's just a delay again because of the whole construction process and where we expect it to be today and where we actually are. So if we had opened our service stations, I would say in February, which we had projected February of this year, and we opened it in August. So we are just a little bit behind. So as I said earlier, when we have these 3 service stations operating, I also mentioned that we should have revenues to the point where we can actually construct our own. And if we have revenues to the point where we can construct our own without even considering to go to a bond or a loan or AP, whatever, then no, we will at the point where, yes, as soon as we're at that point, which is not very far away, we will be able to do our dividend payments as promised.
Okay. All right, Paul, hopefully that was helpful for you. Next question here that was asked, how much of the 39% increase in sales is due to the service station versus the Just Gas partnership? Andrew had kind of alluded to it a little bit, but break it out for this person.
All right. So of that 39%, I would say 80 to 85% of that 39% is primarily from the Paradise service station in revenue. Now, the other 10 to 15% would have been from Just Gas. Just Gas, we had a franchise agreement, I think, in the end of Q2, going to Q3, thereabout. And we have seen significant growth. The LPG, prior to the Just Gas franchise agreement, or LPG sales bulk sales was very low. So if you notice that, although we have a 300% increase in LPG, there's still a lot of room for growth in the LPG bulk sales. So our bulk sales were very low because we were primarily focusing on the service stations and also on the household cylinders. That's a small 25, 30 pound, 100 pound cylinders, 25 and 100 pound cylinders. So we took on Just Gas as a franchisee, considering as stated earlier, previously, considering the investment that they had made in terms of equipment and what was needed to expand on bulk LPG. We awarded them that opportunity to go ahead and expand and help Regency to grow. So both companies will grow together on the bulk LPG side, which we have seen considerable growth on that part. But of the 39%, to answer directly, I would say between 10 to 15% of that was from LPG. And it's constantly growing.
All right. So I believe that would be it in terms of questions that were submitted. What I wanted to do here, Andrew, is ask you to help us have a complete understanding of Regency by asking you 3 questions, right? And I think this will help persons to understand where you're headed from here. So the first one is, you mentioned previously, I believe maybe in our first conversation with you, that your plan and your intent is to make Regency a household name, right? So where that is concerned in terms of your plan towards that goal, what does that look like? Let's say you're painting the picture for 2024, because it sounds like what you're saying is that the focus, at least for the rest of 2023, is to complete what you're already doing. So what are now your plans for 2024 in terms of going closer to making Regency a household name?
Okay. All right. As stated earlier, we are going to be completing these service stations by Q1 next year. Now, with regards to making Regency a household name, I don't want to delve too much or let out too much information currently, but we are looking at strategic locations to put up additional service stations in Jamaica across the island. So in order to make Regency a household name, we intend to build out a number of service stations on certain timelines. So for next year, we are looking to even have approvals for 1 or 2 more service stations. That's what we're looking at now. So that will add to our portfolio of having 5 service stations. Now, with regards to, I mean, and if anything else comes along, just like how Spanish Town Road came along, because what we notice that as we grow, opportunities come along more rapidly. So we get a lot more opportunities coming on the table as we grow, you know. But we are looking at some strategic locations currently, and we are hoping to have approvals for at least 1 or probably 2 in the coming year, you know. So as I don't want to go too much on that. So with regards, so our service station, I think if we can do 1 or 2 per year, we will over, say, the next 5 years have a number of Regency service stations across the island. That's for the service station. Now, for the LPG, I can reiterate, it's a highly capital intensive. We are growing the LPG organically so far. We are continually purchasing our cylinders, our household cylinders, so we can gradually grow that LPG, so we can have Regency being a household when it comes on to cooking gas, right? So with regards to automotive fuel, we want to build out some more service stations across the island, strategic locations, and we want to continue to grow our LPG as a Jamaican company. We want to continue to make it a household name within Jamaica. When you talk about Regency Petroleum, you talk about cooking gas, you talk about automotive fuel. And also, as I said, we are an energy company. So we don't discount or we don't disregard anything in the energy sector. So there's always room, anything to do with energy. Regency is looking in that direction. So as a household name, we want to be known as the energy company.
Okay, thank you for that. So the next piece of that I'm interested in to understand is, so you kind of alluded to it, but I like to ask direct questions. Are you looking at any potential kind of opportunities for inorganic growth? So is there any talk of, because I know it may be something that might come up as an opportunity for you, Maybe not for this year, but is that something that is maybe on the table for you?
Oh, you kind of broke up a bit. Is there opportunity for? You're breaking up.
For inorganic growth, so maybe
Okay.
acquisition of another state.
All right. As I said just how I mean, as we grow, we have a lot of opportunities coming on the table. So if something presents itself, just like Spanish Town Road, yes, we look into it. As long as it's feasible for the growth of the company and for our shareholders to benefit, we will definitely look into it and do our due diligence on whatever project. But currently, we went to Ghana recently, and we are in some preliminary negotiations. Nothing to speak about as yet. So that is something we can look forward to if everything goes, because we have to be, especially we are not in our country. We have to do proper due diligence in whatever investments we might consider making. Although how it might appear in the global economy now, Ghana is on the verge of a takeoff, but we still have to tread very carefully in our decisions and what we do. So we're looking at opportunities.
That was actually going to be my next question. When do you look to expand outside of Jamaica? So you pretty much answered it for me. So I guess that's something to look at in future earnings calls. All right. So Andrew,
you see what that means? We want our company to grow in Jamaica. We want our Jamaican people to benefit from our services. So we want to master our country, and then we move out to other. But if the opportunity presents itself, we move immediately. But that's our intention.
Okay. So I wanted to give you the opportunity, Andrew, to close out. Final remarks to your investors, potential investors, media, anyone who's listening, in terms of, I guess, just kind of putting into perspective what they can look forward to going forward, and any final call to action that you may have.
Okay, thank you. All right, so Regency, we have been listed on the stock exchange for just under 1 year now, and we have stated a number of projects are things that we wanted to achieve within our first year of operation after being listed. We have had delays. However, we have not swayed or diverted from our main focus. So we have completed our Paradise service station. We have delayed, but we have completed and operated our service station since August. Now we are in the process of completing our Negril service station now, which we had promised also, and we should have that opened by the festive season. And also a third full service station opportunity came up, which is Spanish Town Road. Now, to our shareholders and who is watching, Regency Petroleum intends to be a household name in Jamaica. And we have these projects online for the company to benefit, to increase revenues and profits, for our shareholders to benefit, and for the general public and Jamaican people to benefit from our products. We believe that we sell a product or we distribute a product that is of a necessity and a need. And if we can provide these products to our Jamaican people at competitive rates, it will allow growth of not only our company, but also our economy and also socially. Regency Petroleum, as you can see, based on the past year and prior to the past year, we have been we haven't taken for granted our social responsibilities. We pride ourselves in our social responsibilities. We pride ourselves in our economic growth for the country, and we pride ourselves in our company's growth. And we are on that path currently. We have been delayed a bit, but we are still on that path to expand the company, expand Regency, expand in our automotive fuels. We have our service stations putting up. We are expanding our LPG, our cooking gas, our household. We cater to the masses. We started out catering to the masses, providing competitive products to the masses, competitive necessities, competitive needs, cooking gas. So we stick to our roots, and we plan to continue to expand so that our country can benefit. We want to expand and master, as I just said, we want to master this industry in Jamaica for our Jamaican people to benefit fully from these services. And then now I look forward to move overseas or move globally. We still are looking out for any opportunity, because if an opportunity come on the table and it's feasible, and we will still benefit, because when we earn overseas, the money comes back into our country and we spend back into Jamaica. So although we might go abroad, the money still comes back into Jamaica. So we are a Jamaican company, but we plan to expand, but bring back our proceeds back and spend it back in our country. And so our Jamaican people will benefit. We want to see our company grow and reach to that first world stage, and we want to contribute to that. So we are on that path, and we are steadily focusing ahead. And with God's help, as I always say, we have God in the midst of all that we do, and we put him at the forefront, and he will guide us, our management team, he'll guide our staff, and we seek and look to him for full guidance in our expansion and growth. And that, in closing out, I say thank you to Jeremy for given us this opportunity once more, so we can share with our shareholders, and we have answer questions. We have the earnings call now, but we are open. You can email us any questions you have, info@rplgas.com. Any questions at any point in time, we are open to our shareholders, because you are part of the company. This is a Jamaican company. It's a Jamaican-owned company. So it's owned by Jamaicans. We are publicly listed. So feel free at any point in time as a shareholder or a potential shareholder to call us or email us and ask questions. We are open. We'll be very honest and true to you with our intentions. So at any point in time, we're open to the general public.
All right. Thank you so much, Andrew. There's not much more for me to add to that. I want to thank everyone for joining us today. As Andrew mentioned, if you have questions, you can leave them in the comments or simply email them. The information will be shared on the closeout screen. So we look forward to what is to come for this quarter, and we'll see you for an earnings call early 2024.
Okay, thanks for having us again.